Hello, everyone, and welcome to the HUBB Live Trading Room. Some of you might just be joining us from the EWO Trader Live. If so, welcome back. Or if it's your first time joining us for today's session, or for today rather, welcome. Great to have you all. First and foremost, we have to cover our disclosure disclaimer agreement. You've seen this in any of our live presentations. If you previously attended, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. That's always available on our website to be read in full detail there. Let's go ahead and get into the exciting stuff and who we're all here for today, Mr. Rob Roy.
Hey, Zach, long time no see. Howdy, everybody. If you didn't join us for EWO Trader Live, welcome to HUBB Trading Live. So we are focusing on the AI portion of the software and identifying trades. And before we get to that, let's take a quick look at the markets. If you did join us at the EWO show, we talked about how the intraday chart had broken to the downside from the triangle that had formed. And let's do a quick update to see what's happened since then. And basically, we broke out of the triangle and we're going through a consolidation phase. Once again, we'll minimize the chart. Remember now, and what I'd like to do is try to add tips on utilizing the software. If you're new to the software and you're not familiar with this yet, down here, when you go to an intraday chart or your daily chart, whatever, where it says insufficient data down here, that's telling you there's not enough bars. Each one of these bars counts as a data point. So if you're on a 3-minute chart, each bar is the data point for 3 minutes. And if you're on a daily chart, each bar is a daily bar, but it's looking for 377 bars is what it wants. So it doesn't matter the time frame. So you just keep hitting the minimize until that line goes away. Now it tells you that you have enough data to identify a Nelly wave pattern if one exists. Notice earlier we didn't have one when we looked at EWO Trader. So at this point, we do have a 5-wave pattern, and it looks like we still need to make a 5-wave to the downside. So perhaps one more leg lower, and then who knows? Maybe we rally into the close. We'll wait and see if we do get that 5-wave completion. But a little bit of coming back when you have a bit of a gap up like this, like we had pre-market, is normal. So we're just going back and collecting what the futures traders got. That's what happens oftentimes when there's gaps pre-market. The people that don't trade the futures on the floor, etc., want to get their opportunity as well. It's the same thing that happens on holidays and etc. I can go into a whole bunch of detail on that, but that's not what this show's about. We'll do that another time. But at this point in time, it looks like 580 could be the wave 5 target on this 3-minute chart. We'll see what happens between now and the end of the day. It's not much further from where we are right now, as you can see. So it's not like we're talking about a huge move to the downside from here. So maybe just a little slight drift down, and then we'll see what happens as we move into the close. But I just wanted to update you on that if you were with us earlier to show you what was occurring. So here we are back on the daily chart. And if we can manage to hold above that 10-day moving average, that's what I'm watching for today's movement in the actual market itself. And then the big move is, can we break above that top bar of the tap box and complete the zigzag as we move into the election? Or after the election, there could be a day or two pop following the election, especially if we get a result on Tuesday night, which nobody expects. So that could actually give us a pop after the election. And the last wave of zigzag pattern, when you have an ending diagonal, not always, but oftentimes will be a bit of a vertical pop to the upside, almost like a blow off top type scenario, if you're familiar with that pattern. Almost kind of a FOMO thing where people jump in and say, gosh, the market's going up. I'm waiting on it to pull back, and it's not pulling back. I just got to get in. And then that's when you get that last little blow off top, that's usually when things end. So anyway, you know what to watch moving into the close today. Can we stay above that 10-day moving average? That'll be the key. All right, let's move into the AI stuff, which is what we're really here for. So when I click on the AI button, you can see on the bullish scores, We don't have anything that's 75 or above. We don't even have one that's 70. But if we take a look here at this, gosh, I used to get made fun of when I would do live seminars when I would try to pronounce these Spanish banks because I would never get them right. So I'm not even going to attempt to pronounce the name of this, but it is a Spanish bank. It's moving vertically to the upside. We already have our other trades. So I thought since this one showed up, I'd go ahead and update you on the uh, alerts that we have in the banking sector that are AI alerts. We have the BANC, which is the Bank of California, and it's moving nicely to the upside today. You can see our target is at 1640. We've been up to that 61.8% level. We're being turned back just a little bit from that level. Once again, why we talk about all this Elliott Wave Fibonacci stuff, because it's amazing points of support and resistance. And that's really what this all boils down to. A little bit of a directional bias, but support and resistance. And you can see that we hit that level, backed off a little bit, tiny bit of separation from the 10-day moving average, but not a lot. And looks like we want to go up and hit this next level up here at the C wave extension. That is the 100% extension as well as the AI target, both of those converging at 1640. So we do want to give it an opportunity to break above this 61.8% level, but having a nice day for sure today. Let's take a look at the ADX and see what that looks like. And as you can see on the ADX, it's trying to actually turn and make a stronger move. We're trying to get a little curve up in that positive directional indicator. The negative's going down, so the sellers don't feel emboldened at all. I'd like to see a little more of a tick to the upside in the ADX, but in fairness, the ADX takes a while to move, and we've been going sideways for a week, as you're very well aware of, over a little more than a week. And then we had that one tick down, but we've turned and recovered that and back to the upside. So just patiently waiting for this to play out. And then we have HBAN, which is also a bank. This one's Huntington Bank Shares. Similar pattern here where we went sideways for a while. That's kind of what the financials have been doing. It does seem like there may be a turn coming here. We looked at interest rates in the EWO show. And you can see that we were at a point where maybe rates start to go down. And if rates do turn and start to head back to the downside, that should embolden the financial sector, and all things financial should go up. And that's what we should get here. In this case, you can see where the AI target is, and it's below where the C wave extension is on the zigzag. So we should hit the AI target before we hit the zigzag target here. So I kind of like that when, because I put a lot of faith in the zigzags as well, not just AI. I believe a lot of them in both. I was trading for a number of years these directional zigzags before we AIified them, or HUBB AIified them for us, I should say. And so I like the fact. I like it when they agree, but I also like it when the zigzag target is higher than the AI. So when we get to the target price here on the AI, we'll probably take that, but it will be a question on holding it just a little bit longer or go ahead and taking it off. You can see what a high score this HBAN has, the highest score that I can remember, 93%. That's pretty darn high. We don't see them that high very often. So we're going to hang in there with this. And the only difference between the DMI on this and on BANC is that the positive directional indicator is lower than the ADX. The ADX is still kind of going sideways. Same thing here. I'd like to see that ADX tick up, and I think it will if we continue this upward move. But the fact that the negative directional indicator is going down is telling you once again the sellers do not feel emboldened. They're not stepping in. They're not being aggressive. They're backing away, which leaves room for more buyers to come in. And the floor traders, the smart traders, look for things like that. They want to see what kind of resistance are they going to be met with. I've always talked about how when we get into selling, and we just haven't had much of that over the last several years. But when you get into the start of a downward market, or at least the start of a correction of any sort of significance, what happens a lot is the sellers come in and they will send out a quick test. Like you'll get a big drop, and then they want to see, is that drop bought into immediately? And if it is, they back away and they're like, it's not our time yet. But if they press their bets and you get a lot of selling and it's not immediately bought into and it kind of holds and then drifts a little bit lower, that's when the sellers feel like, okay, maybe enough of the buying pressure has waned here, and we'll have less resistance to continue to press to the downside. That's when you see more of a significant correction to the downside. So that's why I pay attention to that negative directional indicator. And you hear me talk about it. I think a lot of people dismiss that too much and don't put enough emphasis in it when they're looking at the DMI. So just thought I would share that with you. So going back over here, we already are in the bank sector. We've got a couple alerts. We don't need to chase one that's vertically up and doesn't have much further to go anyway. I don't even know what the option liquidity would be here. One positive, though, is when you look at the DMI here, that's encouraging in the banking sector because look how that ADX is moving up. And then we have that big separation between the two directional indicators. Gosh, if we got that out of BANC and HBAN, we're going to be golden over the next week or so. So we'll hit both those AI targets. So we'll keep an eye on that. And this is only a 70% rating on the AI. That's rounded up. You can see it's 69.58. So they rounded up to 70%, which is just barely. We have sent an alert or two over the history of the AI at 70%, but tend not to go below that. 75 is really the number we want, but we don't need to be chasing anything when we're already in this sector. One thing that I did want to bring out, I've mentioned this before, but this is what the AI scientists encouraged me to, and we've dipped our toes in the water, but not much more than that on fading the low scores. And so Robert Half, I've traded this before in the past, not super familiar with the company, but I've seen the signal before. And with such a low signal, the likelihood of that going up to hit its upward target is pretty slim. And this is where they say you could come in and fade these. Now you can see that the ADX is moving up. It hasn't broken above 20 yet, though, which that's the key. So if we draw a line right here around 20 in this area, you can see that we haven't gotten there yet. And a lot of times, you've seen this before, it's already done it twice. This actual stock has done this twice, where the ADX has come up to 20 and rolled over, came back up to 20 and rolled over. And it could very well do that again. And so the fact that the ADX is moving up doesn't worry me if we were to try to go short this, because of the fact that it's already done that twice. And breaking above 20 is the key, not just the ADX moving up. The ADX moving up on its own is really meaningless. It's when it's moving up and it's above 20 and between the two directional indicators, that's when the signal is triggered. So just a little bit of a update there on the DMI. All right, so when we take a look at this, it could be interesting as far as a potential downward move. I would want to see what the CCI is showing, that shorter term. And it is on a tick to the upside right now. So it's reacting with the fact that the stock is actually up today. And then if we were going to want to fade something, we'd want to see is there divergence in that CMF. That's what you look for out of the CMF is divergence on money and what the actual chart is showing you. There's a little bit of a tick up. So I feel too good about fading this one. But let's take a look and see what the options would look like. Of course, we're going to want to be on the put side of things. So we're going to be over here on the right-hand side. And I always change this volume to delta. As you know, that's really what we're looking for. So if we were going to look to short this, there is some open interest here. But if we get to the 65 strike put, It's a 15-cent wide spread. Well, that's just a touch wide. Remember, you want 10% is the ideal. Now, we don't always get that. We want 10% in the difference between the bid and ask. That's what we're looking for. So it's a little bit above that, not significantly so. So that wouldn't scare me away. But you wouldn't want the spread to be any wider than that. 319 open contracts on that 65 put with a 27 delta. Now we can consider going a little higher on the delta on these fading trades because these are real quick moves. Now remember, we like that out of the money delta for accelerated moves between the delta and the gamma when you have enough movement to get the acceleration. Does that make sense? I mean, you have to have enough of a movement to allow the delta to accelerate based on the gamma. If you're not going to have a very big move, then, because people have asked me that on these lower dollar stocks, why are you going a little higher delta than you normally do? Well, that's the reason. If you're not looking for such a big move, you're not going to get that acceleration. So even putting it further out of the money and putting on more contracts, you can balance the delta out and make it about the same as going in the money, but you lose that acceleration factor. So we could look at a 57 delta here. You can see it's 310 by 330. Now, a 20-cent wide spread is less than 10% of the ask priced here. So that one is attractive from the fact that the spread's not too wide based on the options. There's only 97 contracts. We want around 100 or more, close enough if we wanted to do something there. So this would be one that we could actually come in and buy a put on if we wanted to fade this. But for me, and I'm still learning this whole fading stuff because I discounted it. If you've heard me talk about it, when we first AIified everything, I just stayed focused in my own personal education and chatting with the data scientists and learning all the AI stuff myself. I discounted fading those lower numbers until they just kept harping on me that it works. And so I've started looking at them more. But on this scenario here, you could look at it and say, okay, well, it's a big update. That's a good day to short. I wouldn't argue with that if that's your point of view, especially if we were getting some sort of divergence somewhere in our technical indicators. And the only one that's really given us the signal that it's okay to go short is the DMI, because it is not triggered. Both the CCI and the CMF are telling us it would be okay to go long here. You know that the DMI is my favorite of all the indicators. I do like the other ones for specific reasons, but the DMI is my favorite. So if there is one that was going to break from the pattern, that's the one I would feel the most confident in. So it is interesting here. And I'm going to watch this throughout the next hour or so after we finish this show and see if it's worth taking another shot at. 15 is a pretty low score. They tell us anything below 25 can be faded on the AI signals. And I haven't done 25. I think the one we did before was like a 9 or something when we sent out an alert. But these, remember, it's very important that I emphasize this. When you're fading a low number on one of the searches, so you're basically going the opposite way. This is a bullish search, but we're fading that number because it's so low. They're very quick trades. These are not things that you want to stay in a long time. I wouldn't even necessarily stay all the way down to the fail zone. If you get a day or 2 or 3, would probably be on the outside where you're getting a downward move. That's what you're looking for. In this case, I think it would be really interesting to see this come down to the 50-day moving average. So if we did that, I would find that pretty interesting. We are at a level of resistance. So if you just look at a basic pattern here, we've been talking about technical indicators, AI, and everything else. If you just go back to the basics of technical analysis, you're at a point of resistance. So we've hit this high back in September. Again, at the end of September, middle of October. Now we're at the end of October and we're testing it again. So your stop here would be pretty quick. It would be not too far from where we are right now. So if we broke to 70, I would think you would exit that as a stop. You would want to see this resistance hold, I would think. and turn and reverse back to the downside. And as I said, I'm doing a lot of practicing and focusing on these and learning myself on fading these lower signals. And as I continue to gain confidence in them and learn more from the data scientist guys, you'll see more of these type of alerts come out. But for now, kind of trying to cherry pick the very best ones instead of just jumping in a bunch of them. So I thought, let me spend some time there. I know we've talked about fading the low signals before, but in this case, I thought it warranted a little bit more commentary since we really didn't have anything on the other side. Now, when we look at the bearish search, we have been seeing more stocks show up. I'm sure you've been noticing this on the bearish side of things, which I think is kind of interesting, especially since I'm feeling like there's going to be some sort of a correction here, whether it's before the election or after the election. But in the not too distant future, we're going to have some sort of a corrective move. So looking at the bearish ones and seeing more show up is interesting, but the signals just aren't high enough yet for an alert. But now we have the same thing where we have a very low rating on this search here. And so we had this big downward move. It almost looks like this one should show up in the sideways search with the drop. And so with this being such a low signal, it's basically telling us that, yeah, we had a drop. I guess that was on earnings. I would assume that was on earnings. I don't know for sure. But that this one may likely drift back to the upside. I don't know what the options look like. Not so familiar with this. So we could bring the options chart up here and take a look. And going out to January on the options, there's just no open interest here. So there's really nothing to do on that one anyway. But I did want to spend a moment on the sideways signals here. So if you look at sideways after a drop, we can see that there's one that's interesting here, WKC. This one reminds me a lot of the search that we originally sent to the AI guys. This was the first one, if you remember, that AI came in and helped with, which was the time strategy, which is stocks that have had a big drop like this and then stay in a range. And the AI not only gives us a score on what the likelihood is staying in the range is, but it classifies that standard deviation range for us with an upper and lower boundary. So it really is helpful if you're wanting to set up a butterfly or something along those lines, giving you where the boundaries are. This one looks really interesting to me. As I said, to me, it's very reminiscent because it's a gap down on a big move down. And something that I think has a high likelihood myself before AI steps in of staying in a sideways range here. The problem is, once again, that whole option thing. So if we bring the options up, and we would want to look to, if we're going to create it, either a butterfly or a put calendar, you would want to sell the November option and capture that time decay. And you can see there's nothing to do there. There's the 25 strike, which is around where we are, and it's a zero bid. There's nothing to do. And again, no open interest. So as much as this looked attractive, there's not much to do there. Now, we could go down to the 30 strike and see that there at least is a bid. But once again, no open interest. So as attractive as this one is to me, from the fact that I've been doing this for a very long time, it was the very right around the time I started doing triangles, which goes way back to my early days of trading. As you know, I talked about the book that was written about it, and somebody heard about my strategy with the deltas, et cetera, and had me write a book about it. But the very next thing was very close by was these put calendars on stocks that have had a big drop. I don't like to mess with the call side. I like to stay on the put side, so I don't even look over there. But as attractive as this is, there's just simply there's no options available for us here. So there's not much we can do with this, unfortunately. It is only a 70 score and not 75, but the sideways movement, the setup is good enough that I might have been tempted with a 70% score if the options had the open interest, because it just, to me, it looks an awful lot like just my original basic search before all the AI data points are added in. But it's immaterial because there's no options available for it. So we just have to pass on those. And for those of you that are in the AI time strategy, you've probably noticed that there has been not a whole lot of signals recently. We do have NVAX, which we have, and that's working out so far extremely well. It's getting a bounce back up to that $10 level today, which is working very well. You can see that tapping that 10-day moving average here, trading right at 10, starting to get a little bit of erosion from those options. Get through the weekend, and we may have something really good going on here next week. Remember, we joked about this during the insiders meeting. It is a drug company stock, and we had the expression "don't do drugs" because a drug company stock was the worst time strategy alert we've ever had. Biggest loser. So it was a little challenging to step in, but part of the fact was that I know this is institutionally owned and $10 is really important. I don't think the institutions want to let this go below 10. That seems to be the idea, because look what happened on Friday. It was breaking below 10 and right back above it today. Let's take a look at the volume and see. You can see that already we've got a pretty good tick up in volume, almost the same amount of volume we had on the entire trading day Friday, and we still got a couple hours and some of the most highest volume part of the day at the end of the day to go. So I think that's showing that there has been some support from institutions that don't want to see this break below and have any additional selling come into it. So I like the way this one's setting up so far. Let's see how it plays out throughout the rest of the week. And if we could get through the weekend, goodness, that would be ideal to get another week out of this one. So that's kind of what I wanted to share with you. Happy to take a couple questions here. We've got just a few minutes left to go. If there's anything that I can help you with on the software, Zach is pretty good expert on this hub platform as well. So there's a question or two on anything, whether or not it's current alerts or anything to do with the AI side of things. Take a couple quick questions, and then we'll get back to our trading day.
Sounds like a great plan to me there, Rob. We have a question here from David on the GDX AI signal. It was a 93 score, but it's trended downward a day after the AI signal came out. Is the AI able to learn from previous experiences, or was this just an unforeseen underlying stock event?
Well, I don't think it was unforeseen. It was the thing that this is something talked about a lot during the insiders meeting. And this is where the question has come in. And I've gotten a lot of questions on the insiders meeting, and rightfully so, about entering these AIs after you've had a vertical move like this. Because I don't like it. I don't like when things go vertical, and I don't like it when they get too far away from the 10-day moving average. But what the AI has been showing us is that some of these signals are so strong that you can continue a vertical move. And we have missed some of these alerts by staying away from that. So it's saying, oh, no, it's too vertical. I'm going to wait for it to come back. And it never came back. It continued vertically. Things can stay overbought or oversold for short periods of time. That's the phrase I've always used. But it won't be a long period of time. But if you have a signal like this and it's gone vertically up and it goes vertically for a couple more days, could it do that? Yeah. And some of them have done that and hit the targets, and we weren't in them because it was too vertical. So that was a lesson learned. And we've had some that have continued higher that we've been in and enjoyed very quick trades, sometimes less than a day. A lot of them 3 days or less. So you never know if this is going to be one of the ones that says, okay, we're overbought, and we come back down and get down towards this 10-day moving average, correct the overbought condition, and then turn and go back to the upside. or do we continue higher immediately? And it's been a mixed bag. The ones that have done this have required more patience. And I've talked about this a lot as well. And all you have to do is go on the website under the AI trades and see how many of them have had 50 to 60% drawdowns and then still turned and gone and hit their targets and turned out to be nicely profitable trades. There's just no way to know. It's impossible from what I've figured out to know whether or not it's going to be one that continues its already overbought condition and runs to its target, or if it pulls back. Now, if you personally want to wait, I can tell you you'll miss some because we did in the beginning. So there's history to show that. And if you're like, okay, I'm willing to miss some, I just don't like seeing my positions go into the red, even though I think there's only been one, I think, that we've closed out that broke the fail zone, which turned out to be the right thing to do, to exit it when it broke it. But that's the dichotomy, right? That's you're raising the the problem question, David, is on do we jump into these when they're already overbought when the signal comes out, or wait? The algorithm for the Elliott wave option is still showing that this is in a current wave 3. I don't think gold is done going to the upside. I think the miners will catch up. It's trying to come back a bit today, so we're a little bit up today. And I think that we need to trust this. That's been the thing to do. The correct move has been to trust the AI and not bail on these when we have a drawdown on the trade. Otherwise, you would have had a whole bunch of losses that were actually ended up being profitable trades if you followed some, 40-50% loss scenario. Some even say 30% get out. I've seen some that say you at 20% loss exit the position. Well, you would have missed one hell of a lot of bullish profitable trades if you followed any one of those systems. So we're just going to follow what the AI tells us. Second part of the answer to your question is, it is true AI, and the AI does learn. It does learn from the results. Every result is what is calculated. Not sure what the right word is that the AI uses it, but the AI does look at the results. Like if it gives you a score on hitting a target, did that target get hit? And how long did it take? And it is consistently learning. So the AI is only going to get better and better and better over the months and years ahead. So yes, it's true AI. So that part is great, and that gives us confidence that the signals are going to get better, and it gives us confidence that when we have to be patient when a position has a drawdown in it, that it's likely to go up and hit its target unless it comes down and hits the fail zone. So I'm gaining more and more confidence in that myself. And remember that I'm still learning as well. I've been trading for, heard me say this, and I'm not patting myself on the back. I'm just trying to say that I've been doing this for a very long time, and I'm still learning. That's one of the things that I love about trading, is you never stop learning. You never get to the point where you know everything. And so it's just, it keeps my juices flowing every day that the market's open. Feel like I continue to learn. So anyway, I feel like I gave that question a pretty good answer. So, Zach, I know we're past time now, but if there's one or two more real quick, we can take those, or just get back to trading.
Yeah, no, I agree. That was a very insightful answer. And so does David. Says, okay, great input. Thanks. And just to further your point there real quickly, that is what sets us aside and makes us unique from all of the LLMs that are currently out there and being developed. This is true AI. So that will actually be the last question for today's session. Thank you all for attending, and thank you for another great presentation, Rob.
Yeah, I'd like to echo what you said there, Zach. I think we've both said it in this presentation, that there's a lot of imposters out there, and everybody knows AI is the thing right now, right? AI is where it's going. AI is where it's going to be. It's what I love about being involved with the HUBB organization, is the fact that they, I think, are one of the, you never want to say I was told, when I wrote the book on the triangles, that don't say it's proprietary. Let me try that again. Proprietary. unless you know for sure, because you don't know that somebody wasn't doing it 30 years ago. And I don't. I'm not aware of anybody else that was doing it that way. So you had to use the word unique instead of proprietary. And so I think that the Hub organization is the first one that had true AI that we are using to send out in actual alerts, and that we have the longest track record of actual alerts going out with AI. But I don't 100% know that, but I do know this is true AI, and I know there's a lot of imposters out there, as Zach mentioned. So yeah, feel confident that you're not with one of those. You're with true AI, and we're only going to watch this get better. That's the exciting thing of it, and that's what everybody should feel great about. That has this software and is getting the AI signals. And as we continue to learn, it's just going to get better and better. So I love it. I'm pretty excited about it. And this old dog has been around for a long time. It takes a lot to get me excited about stuff in the trading world that's new and unique. But gosh, this is it. And it's a lot of fun. So thanks for your attention. As always, we'll send you back to your trading day, and we will talk to hopefully all of you tomorrow during Trade Finder. We'll see how today ends and how tomorrow goes, because this entire week is going to be wild, I think. So thanks again, everybody. Look forward to talking again soon. Take care.